Hello everybody and welcome to my monthly Vietnam update. September presented another set of challenges in the Vietnamese stock market, with the VN index experiencing a decrease of 6.6% in US dollar terms. This decline was mainly due to the weak performance of banking and real estate stocks. Despite our strategic positioning, which involved being underweight in both of these sectors and overweight in export-related stocks, the AFC Vietnam Fund lost a little bit of ground this month. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel and switch on the bell so you don't miss any uploads. As we navigate the changing market environment, it is essential to acknowledge the notable shifts in the market dynamics that occurred during the months of September. In August, the market was substantially bolstered by the remarkable performance of the real estate stocks and the influence of VIC, a major index constituent. These factors propelled the market to impressive heights. However, in September, we witnessed a substantial correction in these very stocks, which in turn exerted a negative impact on the benchmark index. As previously highlighted in our reports, speculative capital had been flooding into the real estate sector, boosting stock prices and driving the broader index higher. However, we remained steadfast in our commitment to value investing principles rather than chasing momentum in this sector. This prudent approach served us well this month, allowing us to outperform the VN index by 370 basis points. On the flip side, our focus on manufacturing, export and public investment sectors proved advantages, with a number of key holdings contributing to our outperformance in the index, or over the index. For instance, T&G, a garment manufacturer, made a commendable recovery in September, witnessing a 19.4% increase of its stock price from the August lows. Another substantial holding, MPC, the largest shrimp exporter in Vietnam, exhibited similar resilience, gaining 8.4% from the August lows. Other holdings like VGG and PTB also delivered positive results. The standout event of September was undoubtedly the official visit of US President Joe Biden to Vietnam, following the G20 summit in New Delhi. The primary objective of this visit was to elevate the partnership between the United States and Vietnam to the highest level, a comprehensive strategic partnership. This move places the United States among Vietnam's top-tier partners alongside of China, Russia, India and South Korea. The significance of this partnership lies in its potential to further expand economic and investment opportunities. One notable sector that stands to gain substantially is semiconductors. During President Biden's visit, leaders of prominent US chip manufacturers, including Amkor Technology, Marvell, and Synopsys, also explored investments prospects in Vietnam. Amkor Technology, for example, plans to invest $1.6 billion in chip production in Bắc Ninh province from today until 2035. Marvell announced the establishment of a R&D chip design center in Ho Chi Minh City, further underscoring the growing interest in Vietnam's semiconductor landscape. Intel, already established player in Vietnam's chip production sector, also revealed plans to increase its investments. This strategic influx of investments from major players reflects the United States' commitment to strengthen its presence in the semiconductor sector in Vietnam, already a top Asian chip exporter to the US, and a key pillar in the latter's effort to further diversify its global supply chain. We maintain our confidence in Vietnam's long-term economic prospects, especially given the favorable market backdrop. We have previously emphasized the Vietnamese stock market is currently trading at historical low valuations, akin to the period following the real estate crisis of 2012-2013. During that time, Vietnam faced a significant economic challenge, yet competent government intervention and key partnerships, such as the Comprehensive Partnership Agreement signed with the United States in 2013, revitalized the nation's growth trajectory. The results was a remarkable recovery in GDP growth and a staggering 175% increase in the market index from 2012 to 2018. September brought some encouraging developments, most notably in the realm of exports. The negative growth in exports saw a significant improvement, narrowing considerably compared to the first half of 2023, when it experienced an increase of 4.6% year-on-year. August in particular stood out, as its market and all-time record high for exports, reaching an impressive $32.4 billion. September is the first month we see positive export growth. It shows that export seems to have bottomed out. We expect a slightly positive growth in the fourth quarter of 2023 and a very strong growth in 2024. One key driver behind this positive export trend has been the increased confidence among local enterprises. This newfound optimism can be attributed to the State Bank of Vietnam's consistent effort to lower interest rates, reducing them from approximately 10% to the current range of around 5.5% to 6%. This has facilitated easier access to low-cost financing for businesses, enabling them to expand their operations and investment in growth opportunities. While the real estate sector struggles have dampened GDP growth substantial, public investment and economic stimulus measures have provided critical support. The upgraded partnership with the United States now brings added promise. This presents a unique opportunity for investors to partake in Vietnam's long-term growth story at valuation levels comparable to those of a decade ago. We encourage you to consider the implications of this favorable environment as you make your investment decisions. The future looks promising, and we are excited to be on this journey with you. Well, this was all from me, and you're going to hear from me again next month with more news, hopefully very positive from Vietnam. Bye-bye.